As President Trump has threatened to slap Apple with a 25% tariff on iPhones sold in the US that are manufactured abroad. In a Truth Social post, he said he had told Apple CEO Tim Cook he expects iPhones sold in the States to be manufactured domestically and, quote, not in India or anyplace else. Trump later added that the same tariff would apply to other phone makers like Samsung on devices imported into the US. Analysts have long doubted whether Apple can shift iPhone production to the US without major price hikes, and those concerns have been renewed by Trump's latest threats. In a note after the announcement, Wedbush's Dan Ives said shifting production to the US would take 5 to 10 years and raises the price of iPhones to at least $3,500. He says the very concept of an iPhone manufactured in America is nothing but a fairy tale. Goldman Sachs notes the 25% tariff threat is lower than Trump's initial so-called reciprocal tariff proposed on Apple's key assembly hubs, namely China, India and Vietnam. Those are on pause but are currently set to resume this summer. It also warns the latest move signals the White House may be less open to future smartphone tariff exemptions. And looking at Apple's bottom line, Citi says a 25% levy on all US imports would impact Apple's gross margin by around 130 basis points for the next fiscal year. But in its base case scenario, the bank sees the US instead imposing tariffs of 20% on China and 10% on India, and that Apple would pass on around 1/3 of the incremental cost to consumers and suppliers. Speaking to CNBC on Friday, the Chicago Fed President Austin Goolsbee said the uncertainty around Trump's tariff announcements was making any planning virtually impossible for businesses of all sizes.
The CEO of a construction company said for them, we're now in a put your pencils down moment where they just have to wait if every week or every month or every day there's going to be a new major announcement. They just can't take action until some of those things are resolved. So it's not surprising that's the environment that we have been in, but it does just heighten the amount of, it's more than uncertainty, it's the non-consistency that for bigger decisions, the businesses are saying that they need to have some idea that it's going to be a constant that they can count on when making the investments.
Let's take a look at some of the big iPhone suppliers and how they're reacting in the trade. It's a bit of a mixed bag. We've got a modest decline in some of them and a slight patch of green in Lens Tech. Well, earnings season may be winding down, but all eyes are on Nvidia, with the chip giant set to report numbers after the market close on Wednesday, seen as somewhat of a bellwether still for the tech sector. And we're going to get a check on the US consumer. Numbers are due from a slew of retailers, including Macy's on Wednesday, along with Best Buy and Gap on Thursday. Joining us now is Tommy Stadlin, who is the co-founder and general partner at Giant Ventures. Tommy, thank you very much for joining us. A ton of tariff news seemingly impacting innovation technology at a point where it really is pivotal for the AI process, the adoption, the fast forwarding, the scaling that we're seeing for a lot of businesses. What would you say is the biggest consequence that you've seen in the tech world from some of the trade uncertainty?
Well, I think that the single biggest thing at the moment is a real opportunity for European technology companies and the wider European tech ecosystem to take advantage of this moment of severe dislocation in the US. And for so long, we could talk about it, but Europe has been lagging behind. What we're seeing now with some of our investors and our peers is a real opportunity to deploy more capital into Europe that otherwise would have ended up in the US. So it is a really zero-sum game between the two.
Excuse me for being a cynic, but the last wave of technology, really big consumer platforms that Europe did not play in, completely missed out on that cycle. We were covering a story last week about Johnny Ive and trying to come up with some new device thanks to AI, which has just changed the playing field. It feels like Europe, again, is not going to be playing in any of that device market, that it's about some of the applications for AI. It's not about these big consumer interfacing names that we saw in the last wave. Is that really going to be the future for Europe again?
Look, there's no doubt we completely missed the wave last time, right? So I think if you look at Amazon's R&D budget, it's bigger than the entire UK private sector's R&D budget. Nvidia, you mentioned just a moment ago, is almost as big as the entire market cap of the FTSE. So we missed out the previous wave completely. But we have all the ingredients to not miss out this time. We have extraordinary tech talent, where we're headquartered at Giant. We're within an hour of 3 of the world's top 10 universities, incredible AI talent. We also have enough capital at the early stages. What we've always missed in Europe is the public markets that really value growth and technology. And that's the reason why people like DeepMind sold to Google for 400 million rather than DeepMind going on to become, one of the true AI giants here in London, which should have happened. So we have the talent, we have the capital at the early stages. What we've really missed is the kind of mature public markets that really value those technology companies. And that will come over time.
What makes you confident it will come over time? What are you actually seeing, hearing from policymakers and from capital markets leaders to actually make that happen?
Look, I think that the single biggest thing is, which policymakers cannot change, is you have to have UK public market investors who want to back these companies, right? But we have the ingredients. If you look at ARM, for example, in the AI space, that's now a $130 billion market cap created in Cambridge and London. So we have these examples of all the right talent. You talked about Johnny Ive earlier. Johnny is a proud Brit. So much of the real innovation in the world has come from European individuals. It's now about, can we scale those institutions over time? And I think one piece of the missing piece of the jigsaw is the European incumbents partnering with startups. So we've teamed up with BMW and Henkel in Germany to try and foster those startups between the partnerships between the startups and the European corporates, which Silicon Valley has not had historically. So I think it's about using our own strengths here in Europe to really drive that innovation.
That's a really interesting point to play into Europe's strength, because Europe has been a leader when, very obviously, especially in Germany, when you look at some of the industrial innovation that has driven the world for the last several decades. Obviously a different story now. When you think about the possible giants that we could see in Europe, what subsectors are we likely to see those in? Where can we see those partnerships best leveraged?
I think you have to look to where are our historic strengths. So financial services, life sciences. You have these enormous corporates here in Europe that want to innovate and want to partner. And that's not been the model in Silicon Valley, right? It's just been about create the startup, go from scratch and disrupt the incumbents. We're seeing something slightly different here, which is those partnership models. And what's interesting is that if you take the automakers in Germany, for example, they now face an existential crisis. What right do those companies have to exist in 10 years with BYD coming from China, Tesla obviously coming to take their lunch as well? And so I think there's been a realization, we have to innovate or we die.
I'm glad you brought up the auto sector, because to me what is rapidly changing with AI, and I can't say it enough, is the business mode and the products and offerings for a lot of these big companies. Xiaomi, a great example in the Chinese market, smartphone maker, now it's a car maker, so it's managed to completely change its business model. The one I wanted to bring up with you though is Google, and there's now a report suggestion that its market share that was above 90% for so long slipped in the final quarter of last year, that search no longer has a moat anymore. So isn't that an opportunity for Europe to get into these areas where it thought that the moat was too wide for it to conquer?
I think that is a big opportunity, but I would be cautioning anyone who's concerned about Google for two reasons. One is they already are monetizing their AI answers at the same rate as their search answers, so they're very quickly caught up. It's been a bit of a shaky road, but they're kind of getting there. The other thing is Google is obviously a massive owner in Waymo, the autonomous vehicle company. I think that is one to watch, because we've talked a lot about auto here. The wave of electrification has happened, and that is now almost commoditized. There is a huge opportunity in autonomy, and Waymo with Google is leading the way there.
It's amazing when you talk to anybody who comes back from California, including our own tech correspondents, the first thing they comment on is the Waymo taxis. And I haven't been since they've been in service, but it really sounds like this is an area we need to be watching. I'm curious what your take is on this phenomenon around Trump brain drain, whether you're actually seeing that show up in Europe, this exodus of some of the key scientific and tech minds in the U.S. leaving the U.S. As a result of some of the policy coming out of the administration.
Look, I think it happens both ways, right? We just talked about Johnny Ive, one of the greatest ever British innovators. He's staying in San Francisco with Sam Altman and OpenAI. But yes, we are seeing at the local level one or two examples of people saying, I don't want to be in the US under Trump. Now, whether that is the academic who's had their visa revoked, all the way up to tech billionaires that we work with who simply don't want to be in the US and during that environment. And I think my world of venture capital and startups, all it takes is one or two or three of these people to decide to build their next big thing here in London and not in Silicon Valley, to create the next OpenAI, the next Google. So it actually can have a big impact, even if it's only a handful of very talented people.
And even playing